11% of ROI in just 2 weeks time. Now what you are seeing is my track record of my Alpha Masterclass day trading system on S&P 500. This particular system itself, I traded with just $100 inside my account, and I able to achieve almost 11% of the ROI since the 1st of March all the way to the current date. As you can see, this is very consistent result, and I does not spend a lot of time in doing tradings. If you scroll down and see what is my trading hours, I only trade like 1, 2, 3, 4, 3 to 4 hours per day, and I already able to achieve a minimum of 10% of ROI. In this video, I'm going to show you exactly what I have traded on S&P 500 in this particular week, so that you can reference to my trading style and perhaps use it on your as well. Coming back to my MT5 program, this is my training setup that I did in this particular weeks. So what you have seen here is everything drawn by me, and there is no fancy indicators. Everything is traded on pure charts on it, right? So what you have seen here is that this is the Friday, which is March of 12, and I will be scrolling through all the way to the Monday and show you day to day what I have traded and what are my trading psychology behind to execute the trade at such an accurate positions. Right, so let me scroll back to the Monday. Right, so on Monday, I actually having a showcase, live showcase in my personal Facebook page, which is called Eason Fintech Services. If you are interested, feel free to follow it on Facebook. So what I did here is that I actually giving out the tips on entering the buy trades on every single entry that I saw in this S&P 500 on previous Mondays. So what you have seen here is that I actually traded on 1 minute time frames, which is very low scalping strategies. So what you have seen here is that I saw a lot of my annotation here. Alright, I saw a lot of seller actually being trapped somewhere here. So I actually entered for a buy, expecting that the seller will continue to keep trapped, and they will stop loss and close their trade and turn their trade become buy trades. So with that strategy, I actually entered a buy trade here, although it dropped a bit at 1 minute time frame, but you can see eventually it goes all the way up, and I close it immediately over here because I saw a lot of fighting between buyer and seller. But overall, this is considered a very good result. What you have seen here, from here to here is almost 1600 points, which is equivalent to 160 pips in the profits. So later of the day, I actually make a little bit of mistake here. So what you have seen here, I actually sell here, but the price suddenly shoots up and go back down, right? Goes up and backs down. So that is a little bit unfortunate that I exit the trade somewhere here, but not somewhere below here. But who cares, alright? I already got my profit on the initial days. So yeah, that is my day tradings. After that is my Malaysia time, sleeping hours. So yeah, I just switch off my desk. That's all for the day. Next, I go forwards to my second day, which is on 9th of March. So on 9th of March, I actually make a small mistake here, which actually result in a bit of drawdown in my accounts. On 9th of March, what I observe here is that over here, what I observe, the market is going up, down. At that time, I'm expecting the market to goes up, but eventually I need to go for a training, so I'm not able to judge in front of my computer to do the tradings. So that's why I actually put some pending orders down here and down here. So what I expect is the price comes down and it will shoot back up. When the time that I'm coming back to my desk, the price is around here, and what I can see here is that the price seems like going up and down, ups and down. And this is what you guys call as the double tops. And in the most simplest word to understand is that the price when it goes up, fell. When it goes up, fell again, goes down. And the time, which is the price goes up again, this is the third time the price goes up. And that time I'm expecting the price to go down, which is around here. And I'm expecting to be able to sell from here to here. But very unfortunate is that actually from the back end statistic, even though all this is all the seller statistics, but then the price goes up not because of seller coming in, is that buyer that buy over here actually exit their trade here, right? So when you buy, you exit the trade is equivalent to sell. So I'm actually make a mistake of interpreting the volume behind my statistics. So I actually enter a sell here, and the price goes out again, I sell again, and the price goes out again, I sell again. And at the time, I realized that I did a mistake, right? This is important that you need to take note about. When you notice that you make a mistake in your tradings, the best way is you should close all your trades, regardless how many money that you are already losing in your trades. And that is the thing that's supposed to be done. If I close everything here, I should be drawn out around 5% only. But then if I'm not closing the trade, it goes all the way up to top here. I actually draw down around 11% of the capitals. So now I'm going to tell you actually that there is a reason behind why I'm not closing my trades, and I'm actually quite confident that this all the sell trade over here not supposed to be closed, right? The sell trade over here, even though I've been trapped, but I still can see that all the seller here or somehow buyer exit their trades, take profit somehow, are actually joining game again and again. And the time when the price goes up to the highest point of that particular day, the market itself started to having a clear seller in, buyer out. What this means is that the people that buy initially over here are actually very confident to exit somewhere here. Perhaps these are the so-called the day trader of S&P 500. Why I'm saying that is that on average, on current markets, S&P 500 daily volatility is around 6,000 points, and let's measure from here to here, which is around 6,600 points. Yep, that is, I think, for buyers' perspective, if they are buy here and they exit somewhere here, that is very reasonable. So they will exit a trade here, alright, they will exit here, and when the buyer exit, the price will shoot down. And the tactic that I apply in this so-called the tradings here is that since I know there is a 3 sell trades here, and my idea is only one. As long as I can get to break even, when all the buyers out, the price go back to the balance area, then I will exit all my sell trades. So the tools that I use in behind to make this effect is that I'm using this robot called close trade group in total take profits. So what this does is that whenever all the trades inside my accounts all the ways go back down to the total take profit of my desired value at the time I'm putting at 1.35%, it will automatically close all the trades here. In general, if I don't understand all this volume from the back end statistic, I will be just blindly close my trades over here and result in a drawdowns. And the time that when you close your trades and tomorrow morning you open out your trades again, you will see the market crash down back to the level that you're supposed to able to close it with a little bit of profits or with a little bit of break evens. But take note that this time is actually at Malaysia time midnight, meaning that most likely either you need to stay overnight or you need to apply sort of robot to help you keep monitor the market and close it accordingly. For people who stay overnight, it is obviously very tired, so that's why I'm using this robot to automatically help me to close all the trades whenever there's an opportunity. So this is sort of my mistake and how I actually deal with it on second days. On the third day of the tradings, I actually a little bit relaxed, right? Because from here I know that a lot of buyers are actually joining into the game and they are getting take profit very happily. Perhaps on 10th of March, they are also being willing to enter again into the markets. So on this day, 10th of March, what I did is very simple. I just basically I enter buy and I go to do the stuff that I need to, like working with these videos tutorials. So what I seen here is that price goes up, it goes back down, hit my break even, then I said never mind, let's just go for a buy again. I believe that a lot of the buyers that got coming in front are actually joining in the buy again. So I just buy and I set the robot again, get me 2.5% of ROI whenever the trade hits. So what you guys can see is that I buy almost at the bottom here and able to close at the tip there, right, at the topmost part of the current day. This is considered a very good trade, to be honest. On the next current days, and this day I'm not so confident in doing the tradings, and the reason is that the market is very much stretched. It's like it is around 2.0 standard deviation of the current market conditions. In the most simple terms, the market is overbought, right? At this day, my hypothesis is that if the market comes down to this region, then I will only buy. If it never comes down, then I will never buy. So I just continue to observe for entire 2 to 3 hours. The price is like shaking here, still not coming down. So I like, maybe it's not time yet to enter. By the way, this level here, right? This level here is almost at the highest level of S&P 100 in 2021. Meaning that from a historic perspective, if the price need to shoot up to the next level, what it needs to done is that it needs to ranging around, right? Ranging around here, and only able to shoot up. And this is what I am expecting. If this does not happen, then I will not do any tradings. So yep, I just let the market goes up. So what happened next is that you guys can see, you see, market crash back down to the level that I initially plot. So I extend it to this day and I say that, okay, if the market price comes down again
then I will buy over here. So what you guys seen here is that this is my trading setup on Friday. I actually put a buy limits here and buy limit another here, which is no, the upper level and the lower levels. So whenever the price comes down again, I will buy again. Comes down, buy again. If you ask me why, because obviously from previous trend, right, from the big market perspective, it is a very serious uptrend, and I consider this is just a small reversal of this big uptrends. On Friday, what I did here is that I actually buy here, expecting the price to continue to go up on here. But then, you know, the market does not go 100% what I need to go. So it actually do a bit of ranging here. And the time that it range here, then I enter for additional buy because I'm expecting that probably the market is expecting somewhere here of the ranging. So tick tock, sorry, buy here, supposed to buy here, but I'm waiting for second opportunity, which is here, and buy up here. At the time, this is around 12 a.m. of Malaysia time, which is already entering the midnight. I decide not to stay overnight because that is obviously not a healthy tactics. So what I do is that I will apply this robots again and set it, hey, if there is a total take profit of 1% per day, I will take the profits, right? So it will close all the trade here. Regardless how much the market goes afterwards, that is totally not my business. And perhaps you might ask, Eason, why you take 1 to 2% only, or why you take 2%? Why so low? Why not take higher percents? So this is what I need to do the calculation together with you. Let's say currently my performance is 10% per 2 weeks, right? This is my current performance. And on this particular week, or on average, I will say that my performance is 5% per weeks, right? This is my performance. So let's do some calculation. On 1 month, equivalent to 4 weeks. So 4 weeks, how many of ROI? 20%, right? 20% over 1 month. So how many ROI just within 5 months, right? Times 5, you will get a total ROI of 100% within just 5 months. That's cool, right? So what I want to say is that you does not need to get very high ROI in every single day. What you need to do is make sure that your profit is keep on consistent and manage the consistency over just a 5-month period of time, or even lower than that, you are able to get 100% of ROI to double up your capital in just 5 months. So that's all for this video. I hope that you have learned something important, especially what I mentioned here, right? You just need 1 to 2% per day in order to get 100% in just 5 months time, and that is very possible with using Alpha Masterclass strategies. Feel free to subscribe my channel, give a like, share out this video to your friend who want to start trading or even do the day trading business together with me. I will truly appreciate it. So I will see you in the next video. Bye bye.